Hi there, Justin from sharepickers.com here. Thought I'd do a quick video on Paypoint just to look at the technical side. It saves me having to draw stuff and put it in the document. By all means, click on the document below. You can see a fuller analysis on the fundamental level of Paypoint. But this is just a technical look at the chart here. So this is a 3-year chart on Paypoint. As you can see, going back to like 2012, June 2012. They're at or below £8, and it's had a good rise. You know, it's bumped off the 200-day moving average, bumped off it again, tested it, and then went up to £12. And you can see 1, 2, 3, trying to take that £12 level 3 times, even 4 times. That's a lower high there, and then it failed, started to come back down, fell below the 200-day moving average, and started to fall. And then it ended up around about sort of, as you can see, if you draw a line here on the £8 level, you can see there's nice support here on that £8 level. So even back here in May 2013, it bumped off that, then jumped back up, which was also the 200-day moving average, coincidentally. So let's zoom in a sec. This is why I think this is in an uptrend now. And I bought these a couple of months back at 9.30, around about this level here, I think it was, when it jumped up, and I thought, was it here? Can't remember. But I bought it at 9.30. And it's had a couple of false dawns. And it traded in a big trading range. But let me just show you the recent action, price action on this stock. And as you can see, first and foremost, look at this line here. I'll draw another line here on the £10 level. And as you can see, there's there'll be a bit of resistance and support here. Previous support is future resistance and vice versa. So you can see hit £10, hit £10 again, hit £10 again, then finally went below. It even had a bit more support there, gapped down below £10, so that'll prove a bit of resistance in future. Came back down here to £9, went back up, hit his head again on the £10 level, and then it's finally grinded slowly down. But here, as you can see, the 20-day moving average has finally crossed over the 50-day moving average here. And as you can see, the MACDs down the bottom, they've been sort of rumbling along under this 0 level. And then they finally punched above it. And that's when it tested that £9 level. I think it may have bought around right here somewhere. And then it failed, came back, bit of hesitancy, tested that £8 support level and bounced strongly back off it. So you can safely say that's a very good support level there, that £8 level. But what I want to show you is the most bullish sign yet. And the MACDs have finally converged or diverged, crossed that 0 line. That's an important 0 line into positive territory. And of course, it's gone above the 50 point RSI level on relative strength, which is a sign of bullish momentum. But let me just zoom in to a 6-month chart. And this gap here is very telling because this is where they announced their results. They gapped up onto, I think it was Thursday. And then this candle, hugely bullish sign for 2 reasons. One reason, it punched above the 200-day moving average and stayed above it. It closed. Now, it hasn't done that for a long time, for like a year, I suppose. And not only that, there is no wick on this candle whatsoever. So, in fact, 3 reasons: gap up, no wick, and it stayed above the 200-day moving average. Now, when there's no wick on a candle, basically, if I hover over that candle, look up here in the corner, top left, when I do that. If I hover over that candle, you can see the open 890, the high 950, the close 950. So it opened there at the low, closed at the high. No messing around, just pumped through the entire day, rising. So that's, what was that, 60 pence in one day it went up, stayed there. And we've got a bit of a hammer sign here, which is not a bad thing, but it stayed again, second day above that 200-day moving average. As you see, it's pumped through before, but didn't manage to stay above it a couple of times there. So this is why I think now we are about to see an uptrend, a change in the trend of Paypoint, which has been basically falling down and trading in a range for the last 6 months. This is what I think. So I think we'll see now the next sort of bullish move, the 20-day moving average cross that 200-day, and then hopefully the golden cross, which is the 50-day moving average, crossing that 200-day moving average. But do you know what? Like I said, look, if you look at the chart here, look at the intraday. It's quite volatile, or it's quite big range, intraday trading range. Like 60 pence there, and you could probably say 30 pence there. And so I think it will come back because at the moment it's not overbought. Look, it's still below 70 on the RSI, so it's not overbought. So there's no reason why it can't power ahead. But I think because it has such a big intraday trading range, I think it may even come back to this 200-day moving average. So if I wanted to buy more, I would certainly put a limit order around about this 916, 915 level, and put an order in for some more. Let's have a look here. So yeah, look at that. So yeah, coincidentally, look at that, exactly on 916, and we've sort of hit it here. So yeah, it's a good level, around about that 916 level. You could probably buy some more. And as far as future upside is concerned, there is that previous support and resistance at £10. So in the short term, they're going to hit the head on that a little bit. But I think they'll power through that to 11. So there's no resistance at all. Once it gets past that £10 level, it's going straight to 11. And there's a bit of resistance there. But remember, this company, if you look at the document there and the website, are restructuring or refocusing on their core sort of strengths. They're getting rid of the online and mobile parking payment side of the business, which the margins have been deteriorating, and they've had to plough a bit more investment into that. And so they're selling that off. And already they've got 44 million in the bank anyway, so that'll generate some cash for future investment to invest in their core businesses. And so I think that will make it a more efficient. And as we know, as you look at the document there, their margins are forecasted to double almost operating margins. So they're going to become a more efficient business. So there's no reason why, in the long term, this is beyond probably 12 months, but long term challenge this previous high of £12. But for the midterm, £10 is short term resistance. So we see support, resistance. And then £11, and I can't see why I can't punch up that £12 level. So by all means, if you want to read the rest of the document, my fundamental analysis on this company, then just click on the link on the web page there, and that'll open up a Google Doc with all that, the bits and pieces in with broker forecasts and all that. And by the way, I'm using an ADVFN chart here, and set up an account and use these charts on ADVFN. It's free. Just click on the link below this video, and if you haven't set yourself up an account, please set yourself up an account, because I use ADVFN several times a day, and even though I'm not on a free package, I subscribe to live prices and all that. A lot of the resources on there are free, so if you haven't got yourself an account, it's worth getting one. So that's my chart analysis on Paypoint. I think they are about to go into an uptrend, and I think right now is a good time to buy. That's why I bought too early. I could have bought at a lower level, but I still think there's opportunity to buy at a little lower level, right about that £9 level, between £8.90 and £9.15 anyway. And I generally think this business is going to be more efficient, and they're expanding into new geographical areas. At the moment, they're in the UK, Ireland, and Romania. But they, by acquisition, I think, suggested that they will be going elsewhere. So that's Paypoint. Hope that helped you in some way. That's it from me, Justin, at sharepickers.com. If you're watching this video and you haven't signed up to the newsletter, please go to sharepickers.com, sign up to the newsletter. I'll try and do a video like this once a week on either my stock pick of the week or on my £1 million penny stock punt experiment.